All right, hope everyone's doing well. Hadn't made a video in a few days, so I wanted to give a quick 15-minute video. So we'll just start with Friday real quick. So again, kind of interesting time period. We're at all-time highs on the daily chart. Now, this is a very interesting kind of situation. We have 1, 2, 3, 4, 5, 6 consecutive bull bars. I was very much surprised today, as in Friday, was a bull bar. You don't see a lot. Just look through here. Let me make this. Try to make it green. Let's just try and find how many. I don't really. Well, that's good enough for this example. Let's just try and find how many bull bars we have in a row. Or any bull bars or bear bars. I want to make these bigger though and enable outlining. It's good enough. I mean, here's 1, 2, 3, 4. 1, 2, 3 bear bars. All through here. There's not 6 in a row. Here, 4 in a row, 2 in a row. Here we go. 1, 2, 3, 4, 5, 6, 7, 8, 9 bear bars. And then we had a sharp reversal up. Well, look over here. 1, 2, 3, 4, 5, 6 bars. And we're getting a gap up. And we're at all-time highs. Far away from the moving average. We're going to sell off. And, look at the weekly chart. It'll be, I do believe we'll gap down. I'm certainly confident we will gap. Well, I'm not confident we'll gap down, but I very much think we will gap down. For the simple fact, it's kind of Al talks about this with options. If you think about it, options involve time decay. A lot of traders want to buy puts at new highs and make a profit while limiting the risk. The issue with that is time decay. So what better way to, the market's always wanting to make things difficult. The institutions, they write options, they sell options. In other words, it's the same thing as writing an option. So if I'm going to sell you a put and you're going to buy a put, meaning you want the market to go down, my hope is it goes sideways. And a lot of times what will happen is you'll get a sharp rally. Excuse me. You'll get a sharp rally on a Friday, kind of enticing traders to want to buy puts, worried that we may gap down over the weekend. And the issue is you're going to get time decay over the weekend. So if you buy the puts now, you get today, which is Saturday plus Sunday of no trading, and you lose value on your puts. Whereas if we would have rallied sharply on Monday, you would have had 4 trading days. So I think that's interesting, but at the end of the day, best looking bull bar, far away from the moving average. Every bar has gapped, kind of look at it. Look, this is interesting. So every past 1, 2, 3, 4 bars have gapped up, and we gapped down a little bit, but very strong bar. I do think the classic strategy, Al talks about this a lot. If you bought the close, put a stop down here, betting price gets up here, probably not going to happen. A lot of traders really do the opposite. They're going to sell here, betting that price gets back down to here before it gets up here. So anyways, that's exciting to look for in the upcoming few trading days. So let's look at the 5-minute chart. So as always, I want to focus primarily on always in discussion. I think most people they're better off trading just in that style. It's just easier. So you have a big gap up on the open. You're going to get a pullback. What you don't know is, are we going to get a spike pullback in channel? Let me just do it like this one. Are you going to get a spike pullback in channel, or are we just going to sell off? So coming to the open, it's always in short on the close of bar 1, but again, why the bad follow through after 4 bars? Probably hesitation, probably going sideways to the moving average. Bulls will buy, second entry buy, they'll buy above here. Bears certainly need to get out. There's the risk of a trading range, which means we could go up to here. And, many consecutive bull bars, odds are we're going to get up to here, so no reason to sell. And even here, it's a low too short, but again, odds are we're going to get back to the open of the day and get above here, so it's not a great short. We're not able to get below the moving average. You got to be thinking, what's the deal? Then we get a big bull surprise bar, and the bar's fairly big. And when you get that, you've got to be concerned. The traders who, let me just do like this, just be easier. The traders who buy the high of the bar have to be concerned when they get this bar. They say, oh, that's a breakout. Maybe it's a surprise, and maybe we'll get a second leg up. Maybe we'll get up to here. Here's the low of the day, here's the open. Maybe the open's going to be in the middle of the day, so maybe we'll have to rally up to here and sell back to here. And then we get a follow-through bar, so odds are you'll get a small second leg up. A lot of traders, when they see this, are going to get out. If Al sold the high of the bar and we got this bar closing on its high, he would take the loss. Because your odds are, best case, you're just going to do this. So you have plenty of time to sell again. So always in, bears sell, bears get out, bulls start buying. They can buy here, they can wait and buy here. Strong breakout follow through. I don't know if I'd buy up there, but you can. But again, probably going sideways. No reason to sell yet, so it's okay to buy. Probably need to stop down here. I'd probably get out shorts here. Would I buy here? You can, I would not. I think kind of forming a trading range. Plus, I think we're going to close this gap. If I did buy, I'd get out of shorts below this bar. I wouldn't necessarily sell yet. Fairly tight channel. Looks like a leg in a trading range. So second entry buy, bears get out, bulls probably will buy. And then they get out of shorts here. Aggressive bears will sell, stop above. But if they do, they got to get out above here. And, do they sell here? I don't know. It's a micro channel, not really a great sell. And turns out, sold off strong in the moving average. Now, I will discuss this in a few seconds, but just in general, maybe traders sell the close here, sell here. But then they have a problem with this bar. They probably get out above it, and aggressive bulls would buy. So two things with that. Number one, let's first talk about this low one short. If you sell here, and then you see a low one short at the low of the day, it's a bad stop entry short. If it's a bad stop entry short, then, think about it like this. It's always best to kind of envision that you're taking the trade at that second. So in other words, here's a good example. Let's say I bought this close and I have now a large profit, and I say, oh, a high one buy. It's a bad high one buy. I wouldn't want to buy right here. Well, if I wouldn't want to buy right there, then if I don't want to buy right now, I don't want to hold short right there. So if you ever have an issue if you're ever trying to decide, hey, should I get out of short? Should I hold short? What should I do? Always ask yourself, would I sell or buy right here? Would I sell this low one short? Absolutely not. Therefore, it's a bad short. I should get out of shorts. One thing up here that I wanted to mention, but just kind of wanted to clear always in first. Very often, I don't know if it's, I think Al says somewhere between 1 o'clock Central Time, or, he'd say 11 o'clock to 12 o'clock. Somewhere in that area on a day where the open of the day is kind of in the middle and it looks kind of like a trading range day, you often sell off and test the moving average. There's like a 70% chance. So when you're over here and you're seeing 2 o'clock area, and let's just, to make it easy, say 2 o'clock. When you're over here and you see an obvious target, the open of the day, you had a big sell-off, big rally, and you see the open of the day and it's around 2 o'clock, the one thing you got to be thinking is, okay, we may test the open of the day. And we did. But what's the issue? Well, weak breakout bar, decent follow through, but then we get this right here. And you always have to wonder, is this an adequate test? I mean, maybe we're not going to test the open of the day. And, so you always got to be, if you're ever, for whatever reason, you're short and then you see an outside up bar like that, you just get out because you'll get burned. Very often you'll get burned. And you don't want to do, especially late in the day. And you can see, maybe one could argue this was the low probability event, low to high, made it in the very end of the day. But it's just, when your risk is big, I mean, if you're selling, your stop's up here, you got to get out quick, especially at the end of the day. Overall, fascinating day though. I mean, you look at the daily chart and you say, what a day. But really, we went sideways from 10 o'clock to 2:50. Okay, so let's look at the next day. And also, if I didn't mention, big bear bar, bad follow through, probably at least second leg down. Bear breakout, bad follow through, another bear bar, probably going to get bad follow through. Traders will sell this close, disappointed, try to get out break even. So here we have over here, and this mess of, actually I want to talk about this day first. This was a kind of interesting day. So you had we've had a couple of these days, big bars on the first part of the day in rallies. So we had a big bar here, risk is big. You always got to be thinking, hey, when the risk is big, two things. There's a high probability we're going to get a measured move up, but the pullback could be very deep. And when it's deep, you've got to be tolerant of the risk, and you can't get out, just like over here. If you buy this close and you say, oh my gosh, at some point, sorry, I don't know what my computer did right there. If you buy here, at some point, this bar right here at 8:55, at some point it's a bear bar. And at some point, maybe for 4 minutes out of the 5, you're thinking, oh my gosh, this is a bear bar. This is a bad trade. And then right at the very end, what happens? It just reverses up. So kind of with that said, one thing just to remember is very often when you have these big bars, you get 50% pullbacks because traders know it's a big bar, it's big risk. They know that, they could do one of two things. They know the odds are good, we'll get a 50% pullback. So what you can do is you can wait for that 50% pullback. Maybe 2 out of 10 times you miss the trade. Maybe 3 out of 10 times you'll miss the trade. It'll just go straight up, but the rest it won't. Or you can buy and just say, screw it, maybe I'll buy more lower, or I'll just buy and put a stop down here and hold. Other traders, what are they going to do in bar 2? Well, what does bar 2 tell you? A lot of traders bought and just took 1 or 2 points profit. Well, if they did that and they bought above bar 1, and if you did that and you said, wow, I wasn't expecting traders to take profits, I'm just going to get out of break even. You had plenty of time. In fact, let's see here. If your entry was 84.25, that means you need 85.75. Price has to go to 85.75 to get 1 point. Your entry is 84.25. Your target is your entry is 84.50, which means your target is 85.5, and price has to typically go to 85.75 to get filled. Well, look what happened right here. It did not go 1 point actually, so I'm wrong about that. But either way, traders are getting out break even during this bar and looking to buy lower. What made this day interesting was a few things. You had a low 2 short, but a lot of bull bars, so you have to be kind of leery that we may get some sort of breakout of, a flag. And in hindsight, maybe this is an outlier. I'd maybe use this bar from this low to this high, maybe just kind of the gap. And that's pretty much what the target was. But either way, if you buy, no reason to get out. I would not get out here. Would I get out below this bar? Probably not. Big tail, I thought we would get a second leg up. You could certainly get out below here. 3 pushes up, 1, 2, 3, kind of a second entry. It's okay to get out. If you do, you got to look to buy again. You buy above here. Second entry short, you can get out there, probably look to buy again. Kind of another gap, so you got to be kind of leery. And then we're just rallying, but it looks fairly weak. 1 push up, 2 pushes up, 3 pushes up. Maybe 1, 2, and 3, and then a breakout above a wedge. Either way, it fails, and very quickly we just sell off. So that's kind of the issue with when you have these weak channels. Traders, it's a momentum trade. Traders aren't buying. Remember, traders only buy due to momentum or value. They're buying because it's, why are they buying down here? Because it's cheap. Why are they selling up here? It's expensive. It's expensive over here. Why are they selling during this bar? Well, because it's a lot of momentum to the downside. So at some point, traders are buying because the momentum's going up, yes, but there's not value in the buy. And at some point, you have all these institutional bears who are they're selling because it's higher. And if it's higher, they can make money, and they don't care. They hope it goes all the way up to 3,100 because then they can sell more and they'll make even more money. Now, again, I wouldn't. A lot of those quote unquote traders are computers. They're algorithms. They have a lot of math behind them. They have a lot of certain risk tolerances. They hedge the bets. It's not. I would not at all recommend someone doing that. You'll get killed. The trader that starts buying down here and scaling in will ultimately, they won't be able to take the pain. They'll take a big loss here and just watch it go back. The trader that sells here, they'll ultimately they'll go, oh my gosh, we're breaking out, and I'll get out. So don't do that. But Al often says, at worst case, you get a new high, get stopped out here. If you see this bar, get out a few ticks below the bar, get out 1 point below the bar. Big bear bar always in short, tails. Could be a 50% pullback. I'd get out of shorts above the bar. Aggressive bulls will buy. And did we ever get to a new high? No, we didn't, but we came close. So bulls buy, scale in, get out of break even. Trading range day on this day. Overall, strong rally, but when you start seeing bear bars, you got to get out. And then we got a strong bear breakout, but failed to close below these lows, turned up. So, thanks for watching.